Hi, hello everyone. Welcome to the Women at Work Empower Grant webinar. Thank you so much for joining us. I want to, gentlemen, next slide, please. If I could just request that everyone stay on mute as well. Thank you. So I want to take you very quickly through our agenda today. Thank you so much for joining us. So first, we'll hear from the Samhita-CGF team about the inception and the evolution of the Revive Alliance and the returnable grant, of course. We'll then be hearing from some of our implementation partners who've been instrumental in executing Revive and helping us really create impact and support our recipients. And then finally, we'll be speaking about the Empower Grant and the RFP in much more detail, and then open it up for your questions. Next slide. Thank you. So I'll now ask Priya Nayak, who is the founder and CEO of Samhita Social Ventures, to come in and tell you a little bit about Samhita and Revive. Priya?
Good afternoon, everyone. So Samhita, I think a lot of know who we are and what we do, but just for the benefit of those that have joined for the first time, we are an impact facilitator firm. We work very closely with corporates, government, nonprofits. We sit in the middle of a large ecosystem of actors. Part of our work is focused on CSR consulting. We work with some of India's largest companies in their CSR and social initiatives. Last few years, we've been building large-scale alliances which bring together Samaj, Sarkar, and Bazaar to really catalyze large-scale change. Gentlemen, if you want to go to the next slide. Just a sense of the fact that today we work with some of India's and the world's largest foundations. We work with multiple state governments, a large number of Indian and global corporates. We really believe in shared value as a principle, and everything that we do is really aligned to ensuring that we're maximizing social impact by leveraging the expertise of our partners. Spend just a couple of minutes talking about the Revive grant. So Revive itself was started as a recovery platform. The intent was to support the lives and livelihoods of those that had been impacted by the pandemic. Very quickly, it's grown to a facility that is also resilience and growth of communities at scale. So the way Revive is, we're supported by 5 anchor funders: USAID, the British High Commission, which is now called the FCDO, STF. Can I just request others to go on mute, please? So we work closely with a large number of anchor funders, but also a very significant number of companies. There are broadly 3 kinds of companies that we work with. Those that are interested in the well-being of their stakeholders. They could be factory workers, community members, folks within supply chain or distribution networks. The second kind of companies, for example, like Microsoft, LinkedIn, Google, MasterCard, are those that are really leveraging their technical competence to offer large-scale support in terms of digitization. And the third set of companies are the ones that bring in their philanthropic capital to allow to serve people at scale. Revive itself has 5 key instruments that we use. We have created a blended finance initiative, and today we will be talking about the returnable grants. The intent is to match the right financial instrument with the right kind of individual and their needs. So we work with grants, returnable grants, interest subsidies, credit guarantees, the entire spectrum of capital that's really required to revive people at scale. We also support a large proportion of our cohorts with digitization support. We know that digitization is integral to business transformation, particularly in today's environment. We will have a few of our partners, including SnapBiz, talk about the work that we're doing to digitize merchants at scale. Most of our cohorts also have access to government social security schemes, market linkages, and skilling. We believe that bringing all of these 5 things together is really important to catalyze large-scale worker and micro-entrepreneur welfare. Today, Revive has already 2 crores of money. This is money that gets distributed across multiple partners, multiple cohorts. I will talk about some of the cohorts, and some of the partners that we've co-created Revive with will be talking about their journey. They've really been instrumental in driving the success of this entire initiative. We've already reached about 160,000 people across the country. All of this has happened within the last year and a half. We're delighted to say that more than 50% of participants that we've supported so far are women. It was intentional. We know that particularly in the last year and a half, women have been disproportionately impacted. And so we consciously wanted to work with communities and partners who are going to stand in solidarity with the women that we want to support. A lot of the work that we've done is customized for the needs of specific women. You'll hear more about that, and that was the purpose of today's event as well. For a lot of our funders, they've sort of seen significant leverage. The whole, and based on everything that we've seen so far, we are well poised to reach about 10 million people over the next few years. We wanted to speak with all of you today because Revive is meant to be a co-creation agenda. What you're seeing on the screen are just a large variety of partners that have made this entire Revive initiative possible. And we stand in front of you along with all of them, really committed to scaling up our collective impact, hopefully in partnership with a lot of you who are on this call. To the next slide. So just to give you a sense of what we've been up to, we've worked with a whole variety of individuals. So women environment ecosystem, women farmers, sanitation workers, beautypreneurs, carpenters, featuring many, many different kinds of cohorts, is that we're interested in the individual livelihoods of women. And we wanted to make sure that our support to these women is fully customized to their needs, their context, their trades, when they are in their own life journey. And so while we will talk about the returnable grant as a potential instrument, the hope is that we're able to co-create specific strategies that each of you believe will be most impactful in terms of reaching the people that you support. Few key principles of Revive really are livelihood transformation, that is at the center of what we do. The way we measure our success is, have we demonstrated an increase in income, greater workplace productivity for the gender equity is a core aspect of what we do, which is why the first RFP that we're putting out is entirely focused on women. We use multiple instruments, like I said, financial services, social security, digital empowerment, but also elements of health, nutrition, sanitation, which we know are critical to ensure that women go to work, stay at work, are comfortable as they do their work on a day-to-day basis. With that, let me just quickly hand over to my colleague, Deepa.
Good afternoon and namaste to everybody. I'm Deepa Gopalakrishnan and I head the implementation of the Returnable Grants program under Revive. So today I'm going to take you through what a returnable grant or RG is and what are the principles that it is built on and the nitty-gritty of its implementation process. And as all of you can appreciate, these are processes that we have developed and evolved over a period of the last 2 years, and many of these have been co-created with our implementation partners, several of whom are present here as well. So a returnable grant is simply a grant which carries a certain obligation to repay. You can think of a returnable grant as a zero interest loan as well, given to an individual. But while a loan has a legal obligation to repay, a returnable grant carries only a moral obligation to repay. And hence, repayment is expected, but it is not a compulsion, as in the case of a loan. The second important point to note here is that a returnable grant is an extremely flexible financial instrument, which provides compassionate capital to the people in need. So the terms of the returnable grant are always designed keeping in mind the requirements of the community and the context of the community. So while loans can get quite a bit daunting for individuals because of the regimented approach, the returnable grant provides certain inherent flexibilities which builds the confidence of the individual to make the repayments in a slow and gradual manner. Can we move to the next slide, please? So because of the above reasons which we spoke about, a returnable grant becomes a very effective instrument for first-time borrowers and for marginalized community members such as women, people with disabilities, and others. So these are individuals who are typically, they have been excluded from the formal financial services as they are perceived to be highly risky, they are perceived to have low credit worthiness. A returnable grant also provides an opportunity to these people to borrow from their trusted networks without much apprehension. And because the RG also mirrors the systems and processes which are used by formal financial institutions, it provides a safe space for individuals to learn and build their agency around accessing formal credit sometime down the line. Another critical point to note also is that a returnable grant generates a huge multiplier effect. So the funds that are given out to the participants from a common pool, when these are eventually returned by the participants, they come back into the common pool. And these funds then have the ability to be churned and revolved to the next set of individuals and so on and so forth, thus generating a very large multiplier effect. And during the times of the pandemic, as all of you can very well appreciate, when the pool of resources was limited in front of us, a returnable grant became a very effective tool to help people who needed credit in such times. So a very quick summary of the returnable grant, if you look at the left side of the screen, it is a zero interest loan. It carries only a moral obligation to repay, extremely easy and flexible, small values that are given out with extremely flexible and generous terms and conditions. A returnable grant also has the power to generate a multiplier effect. And this is a way for us to demonstrate the credit worthiness of the individuals as they slowly enter into the formal financial system. And a returnable grant is also CSR and FCRA compliant. Moving on, I wanted to talk a little bit about the processes that we use in the implementation of the returnable grant. These are the processes around the onboarding of the individual, the disbursement of the grant, and the repayment of the grant. And there are two critical partners, who work shoulder to shoulder with Samhita-CGF to operationalize the RG. The first is the implementation partners, NGOs like you, who work on the ground and who help in identifying the recipients and who provide the on-ground support for the monitoring of the programs. So this is an extremely critical role, as you can appreciate, because you are closest to the borrower and you are very well aware of their economic condition. So while on one hand, you are nudging repayments, you also are on the other hand playing a very critical supportive role to people who are unable to make the repayments. The second important role that the implementation partners on the ground serve is that you are helping the individual navigate the processes of the returnable grant by building their confidence every step of the way. The second partner that we work with, and again, who is somebody extremely critical to the functioning of the returnable grant, is the NBFC or the fintech partner, who provides the basic systems and capabilities for us to operationalize the returnable grant at scale. So right from, how do we onboard the beneficiary by e-signing an agreement, to how are the funds actually transferred into the account of the beneficiary directly, providing repayment reminders through SMSs, automated phone calls, etc. And finally, enabling various digital channels using which the borrowers, the recipients can actually make a repayment of the returnable grant. So all of these processes are seamlessly managed using the fintech partners systems. And like I mentioned, Samhita-CGF works in tandem with the implementation partner on the ground and the NBFC partner to smoothly roll out the returnable grants and also to closely monitor it. Moving on to the next slide, I want to give you a very quick snapshot of the various ways in which our communities and recipients have used the returnable grants. I think the primary use case that we have identified and we have worked extensively and a large number of recipients have been women in this case, has been returnable grants being used as used for working capital. So whenever there are gaps in working capital, be it in the case of street vendors or micro entrepreneurs, so to fulfill that gap in working capital, a returnable grant has come in extremely useful. The second use case that we have worked extensively again has been to digitize the businesses of small entrepreneurs and to enable the provision of digital tools has been enabled using a returnable grant. And finally, the use case which we have seen some amount, quite a bit of traction is the skilling and the capacity building use case. This holds true in the case of youth who are newly entering the job market and who require to be skilled, and hence a returnable grant actually helps them to get skilled and then repay once they have settled in a job. And also in the case of the capacity building of micro entrepreneurs who actually want to use these skills to grow and expand their businesses. Moving on to the next slide. A very quick glance at the success of the RG over the last 1.5 years. We have worked pan-India. We have worked in 10 different states of India. We have worked with about 19 different implementation partners, and you will be listening to some of them right after this. It's very heartening to also note that the repayment rates that we have seen across cohorts is a testament of the success of this model, even during the times of the pandemic, when people were actually able to use the RG to revive their businesses and hence be able to repay it back. So just highlighting a few of the repayments that have happened. The farmer cohort has demonstrated 100% of repayments. The women micro entrepreneurs have demonstrated about 94% of repayments. The street vendors, again, an extremely vulnerable and marginalized group, have demonstrated about 99% of repayments, which means that essentially the whole concept of being able to churn and revolve the funds to the next set of individuals actually becomes true because of the high repayment rates that we've seen. I also want to highlight, if you look at the right side of the screen, the kind of voices that we have heard from the ground as part of our MEL processes. It's our endeavor to keep in touch with each person, each participant into the returnable grants program. 89% of whom have said that the entire process of accessing the returnable grant and running with it for the entire period of 6 months or 1 year, whichever was their tenure of their returnable grant, has been extremely easy, if not very easy. The second important data point I want to draw your attention to is also that 92% of the participants have also stated that they have had all the information at their fingertips regarding what is it that they have signed up for, what are the terms and conditions of their returnable grant, how do they repay, when do they repay, etc. And 98% of the participants have also said that they have been extremely satisfied with the entire onboarding process and the disbursement process. And it is definitely our endeavor to constantly work on these processes, to constantly evolve the processes so as to give a very seamless experience to the participants of the returnable grant. I will request Shagarika to introduce the next part of the next segment of the program.
Thank you, Deepa. So we'll now hear from our implementation partners about their experiences within Revive. So first up, we'll be hearing from Nidhi Arora, who is the executive director and co-founder of Dhriti. And Dhriti is engaged with Revive, it's supporting Revive with the Beautypreneur cohort. Nidhi?
Hi, everyone. And congratulations to Samhita team for hitting this milestone. I think we've been part of this journey for the past year now, and it's really heartening to see just the the impact, the kind of expanse, the outcomes that the program has been able to create. So congratulations. I'll quickly share our own experience of being a part of the Revive journey. Revive became a part of the Dhriti offering to our women entrepreneurs, entrepreneurs who have been running small beauty salons in low-income communities in Delhi. At a time when pandemic had already sort of, in many ways, destroyed the income stream for most of these women. A lot of the women who have benefited from Revive were also the primary bread earners or the only bread earners in their families. So the financial impact that they had experienced due to the pandemic was huge. And just before we actually started speaking to Samhita and Revive, we had started listening to stories about the dire financial needs and how something like this was ideally needed. And that's when Revive came in. So what we were really, or the problem that we were really trying to address with Revive for our beauty entrepreneurs was to support them in sustaining or restoring their incomes. So that we looked at it from both either helping them revive their existing businesses, which was the beauty salons, or add a parallel income stream. And in most cases, it was a related income stream to their existing businesses. In some cases, it was also something outside the beauty space. What Revive did for Dhriti's relationship and offering to its beautypreneurs was, firstly, it was a very timely financial support, something that the need for which had started getting felt. Beautypreneurs had started asking for it, and we were at a stage where we were looking for a partnership like this, and that's when Revive happened. So it was very, very timely. The whole process of creating or co-creating the offering, the terms, conditions, the processes, the application, as well as the repayment processes, the signing of documents, everything was co-created in the true sense, and which meant that we were able to keep the beautypreneur at the center of its design. So things like customization and repayment, moratoriums when the pandemic peaked again, etc., were also something that we were able to, with the Revive team, we were able to introduce it. The biggest thing I think that happened was a lot of our beautypreneurs do not access formal finance. Some of them do, but even those who do are not confident of doing it alone, usually have their male family members supporting them in accessing it, or the male family members are actually accessing the finance, and they're only either the applicants or the recipients. What Revive did was, even though the ticket sizes were really small, the money came to the woman's bank account. The conversation was with the woman, and all the decision making and the actual repayment, etc., everything was being done by her alone, which has given the beautypreneurs a lot of confidence in dealing with the formal financial system. So I think that has been the biggest impact that we've been able to create with Revive. Of course, in addition to the timely financial support. Most of them have actually used this to diversify their income streams a little bit. So for example, in a beauty salon, they would have added products, beauty products, or products which their existing customers would be able to buy, and that would actually get the customers back. The intention of the beautypreneurs and the 3D team was to make sure that there is no additional or drastically additional effort or investment required to create this separate income stream, and it should be able to generate returns for the beautypreneurs immediately. So no lag time, no lead time. And that's what we have been able to do. So most of them used it to diversify their income stream. Some of them have used it to, as working capital to get their parlors back into operation. As part of the Revive grant, 70 beautypreneurs are supported in our current cohort. Majority of them have a ticket size of 10,000 rupees. And like I said, various kinds of impact, but definitely just the comfort level that the women have got, and the confidence that has come to them by being able to navigate this whole process independently, of course with team support, but not having other family members sort of taking the lead on this, but they're doing it independently, has been the biggest game changer for the women in the program. So thank you, Revive, for this wonderful partnership.
Thank you so much, Nidhi. Next, we'll hear from Chandrakant Kumbhani, the Vice President of Community Development at Amuja Cement Foundation. ACF is supporting Revive with our pharma cohorts and is also one of the cohorts with 100% repayments that Deepa mentioned earlier. So we're very excited to hear from you. Chandrakant?
Hello.
Hi.
Yeah. So thank you so much, and congratulations, Samhita team, for this wonderful initiative and reaching at this stage and where we are entering into the new cohort. I think the experience is similar what we have just here. We have started, I think, immediately after first wave in 2020, the first discussion which we have started, and where Samhita was looking for some institution where they can support and pilot this. And at this, I think we have first identified one of the cohort in our Gujarat program area in Gir Somnath district, where we have a large farmer producer company with a member of about 1,800 farmer, and most of them are small and marginal farmer. And I think at that point of time, I think it was a need of many of them a support for continuing their agriculture because lack of the finance was resulting into challenging situation for many of them to having get input for cultivating their land. And at that point of time, I think we have designed this cohort, a returnable grant cohort with the Samhita team, with multiple discussion with the farmer producer company, with the ACF team, and finally we decided to start with a 100 farmer cohort and up to 10,000 rupees of input purchased from the FPO, which is Somnath Farmer Producer Company. So I think there were multiple discussion, and finally we have designed and decided that we will support with a voucher of 10,000 rupees to the identified farmer, and that farmer can purchase 10,000 rupees input material from the Somnath Farmer Producer Company. So it was a completely link between the farmer producer company as well as their member. The entire process, I think I would briefly touch upon is I think what we have done, we have engaged with the entire board member of the farmer producer company, and their first decision was that they will not take any benefit out of this scheme, because as a member of the board, they have decided that each of them will identify 8 to 10 farmers who are really needy out of their entire shareholder group, and they have finally identified, and at the same time they have also taken responsibility that those who will be identified will be such a needy person, needy farmer, and really struggling in terms of having resources for purchasing inputs so that they can at least cultivate their land and continue their agriculture. And I'm very, very happy to report that I think second season, and I have just get an update that first season, I think we have started in 2020 season. By March 2021, we have almost 100% recovery by all 100 farmers. And then in second tranche, I think again we have identified 100 new farmers, and all of them are almost started paying back, and I think almost 25-30 of them already deposited. And the producer company has reported that they will receive all recovery by 20th of this month. So I think it's a successful pilot in terms of returnable grant, and it's really worked wonder for them, and at least securing their livelihood activity continuation. And I think in terms of impact, uh, farmer producer company has developed their confidence in terms of providing this kind of support through their ongoing business, because that was a big challenge in that area, that if you give something in depth, I think there will be a high chance that it will never come back. But I think with this approach, I think we have proved that if they identify right kind of beneficiary and support throughout the process, that that will be a very win-win situation, and it will create a very big impact. And I think, and in true spirit, I think in second cycle is very successful, and I think they are now even looking forward that how they can expand this kind of pilot in going forward, so that many more benefits can be reached out those who are really in need. So it's a truly multiplier initiative, and I think and it's really working on ground with farmer cohort as well, like we have heard about the beautician cohort. And I think there are greater demand with this completion of 2 cycle, and now farmer producer company has also gained confidence and trust into these entire approach, where they also have this business. So it's a win-win for the end user of the cohort, the farmer, as well as the farmer producer company, because ultimately their business will increase by the amount of total size of cohort. So it's a really very excellent experience of Ambuja Cement Foundation since last 2 seasons, and I think we are gearing up for applying this learning to other programs as well.
Thank you so much. Thank you.
Thank you.
Now we'll be hearing from Shweta Aprameya, who is the founder of Earth. Earth is working with Revive, supporting the micro entrepreneur cohort.
Just to provide a very quick introduction, Earth is essentially a fintech platform, and they provide short-term business loans to micro enterprises. And Earth also has a foundation arm which works on the welfare of individuals. So Shweta, welcome, and over to you.
Thanks a lot, Deepa, and a very good afternoon to everybody who's participating on this wonderful forum. And I must congratulate the entire team of Samhita and the wonderful experience we've had working with you all over the last 1 year. So as Deepa pointed out, Earth is an MSME fintech, largely focused on micro MSMEs and women-first businesses. Our foundation, which is the Earth Foundation, works with all our cohorts as well as with the communities across financial as well as health interventions. To give a sort of a storyboard in terms of our own experience with the Alliance as well as the Revive program, I would want to even give you some context of where we were in the last 1.5 years. So we work with, we've already touched 3.5 lakh micro MSMEs across 18,000 PIN locations in India. And as a fintech, this is a large scale. And what typically happens is most of our customers, which are these micro MSMEs across occupations like general store, beauty parlors, home boutiques, mobile repair electronics, everything that you can think of, which is classified under proprietorship, solopreneurs, micro retailing, it's very small markets. The biggest challenge we were seeing that these micro MSMEs largely were not just affected financially, but they were affected health-wise, they were affected emotionally, and they were affected socially. And I think we did the voice of customer and we realized that there was a much larger need to at least impact one of the interventions, if not all, to be able to give them some sort of a relief. And I think as a fintech service provider, of course, financial was the first thing that we thought about. And there were 4 aspects that we felt there was a need of someone to come together and really collaborate and think through some innovative programs. One, of course, was new resources. And we all would acknowledge the fact that when COVID happened, there was suddenly sort of a complete dry line. There was really no capital available in terms of the loans that these micro MSMEs could get. Even us as an institution at that point in time, we were looking at how could we have more resources, fresh capital that we can provide to these micro MSMEs whose businesses fairly had, in some cases, shut down, or in some cases were really not operational at that point in time. Second was, of course, a lot of them gave us, the feedback they needed interest waivers. And we know that large moratoriums are really not good for these customers because it builds up and accumulates interest, which is not a very good thing for a micro customer. So they needed interest waivers. The other thing that they needed was acceptance, which means that accept that we are under shock and do not tell us to oblige to repay, which was a very important insight and feedback that we got to say that they're looking for acceptance in these times. And last but not the least, they were also looking for some sort of an added protection. And what I mean by that is, can they get some insurance claims? Are there some government welfare policies that they can access, and who could help them with? So these were sort of the 4 areas where we were seeing need assessment during what we were going through during the pandemic. And I think here comes the Samhita team with the Revive program, really thinking through and being a thought leader on so many different frontiers, and thinking about the sort of the solopreneur, the proprietor, the micro enterprises, and most importantly, women who were at the frontier of, almost managing the household, managing a lot of those people who came back from cities. So there were, of course, more people, less food on the table. And third, whatever businesses they were doing were already under tremendous shock. So what we really, we were touched during this program was, one, there was flexibility in terms of what we could do as a returnable grant. And I think that was a very nice way of giving some room for rethinking and redesigning in difficult times. The second was the impact measurements were very clear. And I think this is kudos to the teams at Samhita in really articulating how you could measure what we do. It's not like, a pool of money that we get and then, we forget about it. But more importantly, that this is responsible money, which is being provided to almost like recharge and restart, but it's also important to continuously measure. And I think the third thing was the way the cohorts were being looked at. So you, of course, saw in the earlier slides where there were registered vendors, there were occupational driven sort of cohorts. We were, of course, working as Earth, we were working with both micro enterprises across occupations. We were working with banking correspondent agents. We also had a little bit of registered vendors, and a lot of this was really women driven. So I think overall, from a collaboration design perspective, flexibility, objectivity, and sort of measurement of what we should do now, what we are doing now, and what we can really get in terms of the results. The 2 specific programs that Earth collaborated on, one, of course, through the returnable grant, is sort of an interest-free loan, which was provided to the micro enterprises, which were women-first businesses across occupations. Whether it was, as I said, a sort of a home boutique or a saloon or a small saloon or a garment store or a general store. But I think what was really nice, and this is, we have so many women stories that we have been sort of listening and we've been sharing with the Samhita team. A lot of these women were actually quite surprised because there isn't, many people who come forward when the times are really bad. right? And they knew that there is going to be some delays. They knew that there's going to be tough times. So they were actually not thinking of this capital like a grant, which was, I think, a big win for us. Because the moment they think about it like a grant, it's sort of it was more to do with to say that, okay, is this sort of a free pool of money coming in? But I think they actually took this money as, it's almost like a moral capital which was given to them, and they felt that this becomes their responsibility even more to step up and come back and start repaying. And we saw some excellent results coming out of this returnable grant interest-free loans, because they felt even more happier, they felt even more supported, they felt even more accepted, and most importantly, I think they knew that this will give them a breather to take care of their existing liabilities as well as their household. The second beautiful program which we designed and co-created together was around pay for performance. And I think it was very timely developed. And I think as the whole world, including all of us, were coming out of the COVID phase 2, there was a time when everybody thought that micro MSMEs have to come back because they are the real sort of the saviors in that sense. And we needed to support both type of enterprises. We needed to support those who were still going through a bad patch and needed to be motivated to say that if you try to be a slow payer, try to be, try to pay some of your EMIs, or for those who were trying to really pay all their EMIs, both cohorts should be motivated and should be given and sort of a fund which gives them sort of a moral boost to say that they are showing good behavior, which is to repay their loans, and they should be rewarded for it. So we have seen again a huge response, which is to say that there is almost like a rewards program, because I'm trying my best, I'm coming out of this, I'm reviving, I'm building my business, and here comes a program which has incremental value if I continue to show good behavior. There were 2-3 really positives outcome of this program, and we are still, of course, still in the last leg of this initiative. One, of course, the bureau records, and all of you would be familiar, especially as far as capital is concerned, every individual who takes formal capital gets affected by bureaus. Their bureau records started improving, which is very important for a new to credit customer. And I think this is a big win for the program. The second is all of them sort of fast tracked how they were actually looking at their repayments and how they were actually thinking about, their EMI payments. So they automatically were becoming better financial planners. I think these two were sort of things that we had not thought through, that, customers will tell us, and would be the sort of the not so obvious outcomes of a program like this, but it has, and showing some great results. So I think these are, I would say, the two important programs. And I would just want to leave you with one thought, which is to say that while we do these two programs, one of the big things that we felt which Revive brought on the table was continuous focus on capacity building as well as skilling at the same time. So we ran sort of Vittiya Pathshala, we did financial literacy, we did awareness. I think that's a very important aspect that we had with both the programs. And that helped to really strengthen the core objectives of the two programs. And I hope, and I really wish that this goes to a completely new level, where we are right now with a few thousand. Like Priya said, this number has to go into millions. It has multiplier effect because one micro MSME employs 2 unskilled workers, which means that if you impact one person, there's tremendous value in impacting the others. And we have 63 million micro MSMEs in India. So the question really is that if this can work at this scale, can this go to a scale that we just saw, and we want to take it to, which is about, let's say, 10 million or 20 million, and finally start seeing some huge impact in the ecosystem. So really hope to see this becoming mainstream. And once again, congratulations to everybody who's putting all the heart into this program. Thank you.
Thank you so much. Thank you so much, Shweta. Now we'll hear from Prem Kumar, who is founder and CEO of Snapbase Cloud Tech. Snapbase is working with Revive for the small merchants cohort. Okay.
Thanks a lot. Yeah, it's a pleasure and privilege to be here. It's a wonderful feeling to be celebrating very hard work, spaces which are very difficult to address. I mean, to include the non-included, to address the challenged is not an easy job. It's far from easy, and getting things happening at the bottom of the pyramid is very difficult, right? So just to give you a little backdrop or the landscape to where we were fundamentally talking about small merchants or grocery merchants across the country. There are roughly about 12 million of them. Most of them have a gross income of about 30,000 and a net income of probably about 15,000 family-run businesses. And these have been really badly impacted by this crisis. What is the nature of the survival of this merchant is not a narrative about the survival of that merchant, but India is a country where 70% of the basket or 80% of the baskets are below 100, 150 rupees, and where shoppers shop 3 to 5 times a week. So this is the survival of a national infrastructure that provides supply to probably the billion population of this country and not the top 200, 300 million population of this country. So this goes far beyond the narrative of the survival of a merchant to the survival of an ecosystem or the survival of an essential supply chain to the larger population of the masses of this country, right? So that's the landscape that we are coming into. And what happened during the pandemic was that besides the personal difficulties most of these merchants had to go through because they have to literally run the shop every day, earn for the day, but the challenges was that they were completely cut off from the mainstream of business. Everything around the store changed, right? The way the shoppers shopped, the way the supply chain happened, the supply of finance completely changed. 90% of them were dependent on the informal economy for working capital funding, or what they call as hand loans. That dried up completely. The supply of goods completely dried up or became far more difficult. Distributors stopped giving credit to most of these merchants. And this was pretty much a challenging situation. And this could not have changed unless they got digitized, got included into the mainstream of the business. Then came the second largest challenge as to how, that's when we sort of approached Samhita, and really it's a wonderful feeling to see the overall success of and the tenacity to make very difficult things happen at the very bottom of the pyramid, where in fact during the pandemic, very few people actually wanted to work with the segments that are so impacted. I mean, the larger institutions were finding it very difficult, and they had to focus upon their own unit economics to make things happen. And it was an environment of very challenged environment, and continues to remain a very challenged environment. So the question was, how do you get this digitization? Computerization of a store would probably cost 40, 50,000 rupees, which is next to impossible for anybody to sort of do. So we worked around this by triangulating multiple stakeholders that included like banks and brands to create a product where the technology or the solution was made available to the merchant at probably a couple of hundred rupees a month kind of thing, which replaced the cost of doing something at 40 or 50,000 rupees by leveraging the hardwares of the banks or the mobile companies and creating a solution which was comprehensive and very affordable and consumable by this population. Now that sounds pretty easy to say, but the efforts that we had to put in along with the Samhita team to triangulate between various stakeholders, get their consensus, get them to see the purpose of the whole mission, the kind of change that it could probably bring about, has been a process which called for a lot of first principle thinking as to how to make this happen, to be able to have the kind of in-depth strategy, planning, execution, and tracking. The flexibility which Samhita did show to make mid-course corrections and improvisations that were required during this kind of process. So what we did was to deploy this technology across 5,000 merchants. And the impact was merchants got digitized, they became, the most importantly, they became a dot on the map of the ecosystem of brands and the distribution, supply of goods and supply of money ecosystems, right? Which enable them to access to working capital, loans, access to buy now, pay later products, access to supply chain, and more importantly, access to promotions from brands, which never could reach them in the past. So I would rather consider it a very impactful process. roughly about 13 to 14% of those merchants were women. And the larger opportunity that we see is that we believe that running a store is probably one of the most comfortable occupations for a woman, because most of these shops are part of the home or very adjacent to the house. The lady of the store, can manage the store very easily. She can get enough time to take care of the rest of the work that she can potentially do. And the man of the house could be facilitated to get a second job, which is literally ending up doubling the income of that household. And the opportunity, the larger opportunities probably address 7, 8, 9, 10 million households of that nature, and to sort of ensure that an infrastructure that serves the 1 billion population for day-to-day essentials, where actually shoppers earn enough to buy for the day or the next day, right? So when we see a large number of baskets, 70, 80% of the shopping baskets have 6, 7, 8 items in it, and the total bill value is 200 or 150 rupees, right? Now, who is going to service that population of the country? And it is these merchants, and their survival is an imperative, not just for their own needs, but to address the larger supply chain of essentials across the country. So we were addressing only the larger end of the market or the top end of the pyramid. Stores which sell 10 lakhs or 15 lakhs a month was the focus of our business. And when we saw what was happening during the pandemic, we said we should do something about it. And that's when we approached Samhita and did explain the problem. I don't think we had an answer at that stage as to how to address it, but that's where we respect Samhita for its efforts to sort of collaborate with us, work together as a team to find a solution and say that, look, how do we connect the dots? What's the problem? The very first principles approach towards the problem, and say, what is the kind of solution? And then the tech teams gets involved to produce a solution. Then you create those partners to enable this is to happen. So one is, what is the product? Two is, how do you reach that customer? Nobody wants to go there. So how do you create a system, a channel, a go-to-market strategy to enable that this customer gets the technology? Then the next step is, how do you ensure that this technology gets consumed, the customer feels comfortable with it? And then comes the next step of ensuring there is a system to get rewarded, the customer gets. The great thing is that whatever support that we have been able to provide, which was almost underwriting the 1-year cost of the technology for the merchant, there's been zero delinquencies as far as that is concerned. And what's been of great learning to me is that the intent to pay back is very high. The challenge is sometimes ability, but most cases, almost in every case that we have had zero issues about it. We really look forward to the opportunity of addressing the larger opportunity of, in a way, to create 7 or 8 million kirana stores or grocery merchants being run by women, facilitating the man of the family to get another job as a distributor, salesman, or a truck driver, or something which is closely associated with the ecosystem, and thereby sort of literally doubling the income of that house from roughly 15 or 20,000 rupees to 30 or 40,000 rupees a month. And I think that's a real big change if we can achieve that. Looks like we seem to have found a path to do it. The question is now how to go and address the larger scale up opportunity. The experience of working along with Samhita has been not only just feeling very rewarding, but it's been a great experience, both in terms of how difficult things can be achieved, how tenacity pays rich dividends, how in-depth planning and execution and tracking is a very key success factor. Measures, matrices, how do you keep changing? How do you look at things, and how do you review things literally regularly? And so wish you very best of luck for all that you've been doing. It's a wonderful feeling to see the success that has been achieved in a space which is very difficult to achieve success. I think it needs a call out that what's being achieved is not easy. It's far from easy, and it requires a lot of perseverance, effort, besides just money, to make all of this happen. Congratulations.
Thank you so much, Prem. Thank you. Now I'll just ask Deepa to come back and we'll speak about the Empower Grant in just a second. Before that, we'll do a quick round of just addressing some of the questions that have come in. So Deepa just wanted to check in. Hi, okay. Pavni wants to know if we require FCRA certification to become an implementing partner.
Sure. Thanks, Pavni, for this question. And I'm sure this is on the minds of several folks here. So as I explained, because the fund disbursements and repayments would happen directly from Samhita-CGF through the NBFC to the individual and back, we don't require an FCRA certification, but I'm also happy to check this back with our finance team, but I think FCRA certification will not be required.
Thank you. Okay, the next question is from Saundarya. Thank you for joining the session, Saundarya. She wanted to know what has been the average ticket size of the financing provided cohort-wise?
Sure, Saundarya, what I will do is to just give you a gist of the average ticket sizes. So most of our cohorts have fallen in the average ticket size of about 10,000 rupees for the returnable grant, and the tenure has been a 1-year period, which means that we have given a moratorium period, provided a moratorium period of 2 months, and the repayments happen over a 10-month period. This has been how many of our programs have been structured. However, we do have grants, returnable grants in other ticket sizes as well, which goes as low as 5,000, but as high as 40,000 as well. It really depends upon the use case. And like we mentioned earlier, we are most happy to co-create the program, the terms of the returnable grant with you. Could we move on to the next question?
Yes, hi, sorry, I was on mute. Thank you. Shraddha has asked if women can apply for these grants to purchase two-wheeler vehicles to take up a last mile delivery agent job. And is there a scope to expand the target beneficiaries?
So I will take the second part of the question first. Absolutely. The cohorts that were mentioned were really representative. It was only a sample of the entire landscape that Revive works with today. We are more than happy to consider and work with you to expand and identify newer use cases. Regarding the purchase of two-wheeler vehicles, I think a returnable grant as a financial instrument really needs to be looked as a bridging kind of a loan, which is of a certain value, a certain optimum kind of ticket size. I think a two-wheeler loan might actually go much higher than what a returnable grant actually seeks to achieve. Having said that, we could definitely look at models where returnable grant provides part funding of the two-wheeler vehicle purchase and the remaining capital comes from elsewhere. We can definitely consider such options.
Thank you, Deepa. We also have a question from Niku about whether the RG can be a part of their existing projects. For example, they are currently engaged with 200 women entrepreneurs in Odisha, and so they want to essentially understand if they can avail the RG to support their existing entrepreneurs as well.
Absolutely, Niku, thanks for the question. We would be very happy to understand more about the context of these women micro entrepreneurs that you have mentioned in Odisha, and we could definitely work with you to design the returnable grant for them.
we'll take a couple of more questions and then we'll hold them until after the we talk a little bit about the RFP. We have a question from Ravi about whether we can use the grants for education projects. Is that correct, Ravi? To clarify if I'm misunderstanding your question. But yeah, for education grants.
Sure. If by education you mean acquiring certain skills which will enable the individual to participate or enter into the job market, absolutely. I think the idea of the returnable grant is to use it as an enabler to further the livelihoods of individuals, whether they are people who would like to get set in regular jobs, in which case an education, a skilling kind of a program through returnable grants would be the right way to look at it. Or if these are individuals who are entrepreneurs and they really are looking at either a working capital or ways and means to grow their businesses, then in which case also returnable grants becomes the right option. So yes, absolutely. Education in terms of skilling individuals to enter into the job market is absolutely a viable use case.
Thank you, Deepa. Okay, so we'll take two quick questions and then we'll move on to the RFP. Saundarya has asked another question about, so she's part of Haq Darshak and she's said that they work with multiple, in multiple states with women entrepreneurs who may not always be comfortable with textbook, bank loans or government schemes. And would the Revive grant cater to individual micro entrepreneurs apart from an entity to entity collaboration, where a cohort is identified and supported? So essentially, it's about individual versus cohort collaborations, if I understand correctly.
Sure. First of all, I have to state here that, Haq Darshak has been a very integral part of the entire Revive program, and they have enabled access to social security to several of our participants. So thank you so much. And Saundarya, to your specific question, we do prefer to work with a cohort where an organization is backing the cohort, because as you can understand, purely for operational reasons, it is very difficult for us to track and onboard and maintain those touch points with individuals, and hence having an organization on the ground who is actually helping with the support, who's providing the guidance, the hand holding to individuals, becomes very, very critical. However, I'm more than happy to explore what exactly you have in mind, maybe outside.
Thank you. And if I might ask that everybody just mute. Thank you. And finally, and we'll come back to keep adding your questions, everyone. We'll come back. So the final question is from Srotoswini. I hope I've said your name right. So they train poor rural women in tribal drylands of Madhya Pradesh in the art of stitching. So she has asked if they can apply for the returnable grant to pay salaries to the skilled trainers who train these women.
So typically, Shrutoswini, the use case that we are most comfortable with is where the returnable grant is availed by the individual directly. Think of it as a loan. The use case that you are mentioning, where a salary is actually being paid in lieu of certain services that have been given, that is not an use case that we have worked at a large scale. However, happy to talk to you about it offline. But this is not the standard use case that we have worked.
Thank you, Deepa. I think let's now move on to the RFP. Julmal, if you could go to the next slide. Deepa, over to you.
Sure. All of us here are very well aware that, over the course of the last 2 years, through the course of the pandemic, women have been disproportionately affected. And if you look at some of these very stark statistics, which are staring at us from the left side of the slide, we're talking about India faring a gender parity score of 0.48, which really means that, when a country has a gender parity score of 0.9 or 1, it really means there is an equality of genders. However, India definitely is falling much behind. And over the last 15 years, India's rank in the gender parity score has fallen to fallen by about 28 places. And it is definitely going to take several years for us to reach a certain level of gender parity. So the only reason why I'm mentioning some of these really stark statistics is to really bring out that there is a lot that really needs to be done to help the women enter back into the workforce and to sustain them in the workforce. So in an attempt to do that, Jilmil, if you can move to the next slide. So keeping in line with this thought, Samhita-CGF takes immense pleasure in launching the Women at Work Empower Grant to help women workers and micro entrepreneurs who have been disproportionately impacted by the pandemic. As you can see, currently this is a INR 1 crore facility with the opportunity to impact several organizations and several cohorts through the facility. The objective is really to provide affordable capital through returnable grants. So while your organizations could have a community program that you are working with, or a program which really aligns with an industry, but having returnable grants as an integral part of this would be an essential requirement. And the idea is really to use the returnable grants to improve the productivity, to improve the capabilities, and to help people grow their incomes and their livelihoods. Digitally enabled solutions would definitely be viewed very favorably. So using technology and digital solutions to reach a certain scale and to enable women expand their businesses, these definitely are features that we would look for in your programs. Moving ahead, a very quick view into the timeline and the selection process. So while the RFP is open starting today, the applications are open starting today, sometime around mid-April is when we would look to announce the first set of shortlisted participants. Around April end, we will request the shortlisted participants to make a detailed presentation to Samhita-CGF. And towards May, we will be announcing the grant awardees. Just a quick look at what are the selection criteria that we would be using for awarding the grant. So compliance to the RFP guidelines is definitely critical. The characteristics of your organization, such as, is it a woman-led organization, a woman-led team, these considerations will also be viewed favorably. The content of your proposal definitely is a critical input. And finally, the track record of your organization in terms of working in the intersection of women and livelihoods will be a critical factor as well.
Thank you, Deepa. I think if anyone has questions, we'll be moving on to the Q&A now, and do feel free to add more questions in the chat, or do raise your hands and we'll call upon you to ask your questions.
I also wanted to take a quick minute to show on the screen how you could navigate to the RFP, how you could actually access the RFP. If I can request Jermil to pull up her browser.
Yes. Thanks, Deepa. Hi, everyone. So now I will sort of show you all a quick demo on how to access the Women at Work Empower Grant link. Just give me a second. Yes, I hope my right screen is visible to everybody.
Yes, thank you, Jilmil.
Yes, so as a step one, you sort of go on to the revivealliance.com website, which is basically our official website for the entire Revive platform that we handle. Now, as you can see on the screen, on the front page itself, you'll find a bold heading called Women at Work Empower Grant. Now, right below the heading, you will see a box which says apply now. Once you click on that apply now, it will take you to the grant form that the organization will have to refer to while applying for this initiative. Now, very quickly, this RFP document contains all the necessary information about the grant, basically who can apply, what are some of the mandatory fields to adhere to, and what all an organization has to submit, how to submit, etc. So later, I would request you all to check out this document in detail to apply for this grant. Yep. Thanks, everybody.
Thank you, Yolman. Thank you. So yeah, does everyone want to start putting questions in? Yes, Anurag, so the deadline is the 25th of March, which is mentioned in the RFP as well. Deepa, do you want to come in as well? There's a question about the budget, whether the 1 crore includes the RG. So could you elaborate a little bit on the budget and the RG?
Yes, yes, surely. So yes, the 1 crore is the total grant value that's available, and yes, it absolutely includes the RG fund as well. We are looking to work with about anywhere between 3 to 5 organizations, and yes, so there is also, of course, the possibility of additional funding coming the way of the RFP. Currently, it stands at a 1 crore grant size.
Thank you. Does anyone have any more questions? Do feel free to raise your hands as well. And we'll be sharing this, the RFP link, which includes some of the information about the RG that we've shared today. Within the RFP, there's also information about how you can reach out for any support. So do feel free to also reach out once you've gone through the document. If you have any questions, if you have any clarifications, please feel free to reach out over the next couple of weeks. And let me just quickly read out Deepa's response as well. We've gotten a question about geographical preference, and we have no geographical preference. We're open to work pan-India. Okay, so I think we'll wait in case there are any more questions for a couple of minutes. But in the meanwhile, just very quickly, we'll repeat some of the key information. So the RFP, you will be able to access it starting now. We'll be sharing the link in an email. The deadline will be 25th of March, and you will be able to apply and get any sort of guidelines for your application within the document itself. And yes. Sorry, is that a question? Okay. So in case there are no more questions, I think all that remains is for us to say thank you very much for joining and giving us your time on what I'm sure is a very busy Friday afternoon. Sorry. So we've got a question about just the overall budget, and it is 1 crore overall for all the organizations. Okay, so thank you very much for joining us. We'll be sharing all of the information. We'll be sharing the link to the RFP as well in a subsequent email. And have a great weekend, everyone. Thank you.